Hey everybody, welcome back to Chipstock Investor. I'm Kasey.
And I'm Nick, and this is podcast edition.
It's earnings season, so you're going to get some videos without our faces.
Yeah, we're trying to keep up with the normal excess burden of work, and I didn't have time to put my makeup on.
Let's talk about Intel. Intel just released their quarterly earnings, and we've got some things we need to talk about.
It was another doozy.
One thing we want to focus on is this dilemma that's happening in the old semiconductor industry IDM business model. IDM's on the left side of our semiconductor industry flowchart in red. That's where Intel plays. And we've discussed this with a few different companies. Fabless product engineering specialists rule the day. And that means those fabless designers are making use of the third-party foundry business like TSMC. And it really remains pretty unclear what prospects there are for the future of IDM business models. Intel has made some changes over the recent months. Of course, one of the biggest hiring of a new CEO, Lip Bhutan, and it's early on in his tenure at Intel, but it appears to be pretty much a continuation of the previous strategy to rebuild Intel and return it to greatness. We'll be discussing that further in a blog that we have coming out on our website. Make sure that you're signed up for our free newsletter, get you access to all of our updates of videos and on our blogs on the website. For this video, we'll focus on some of the financials for Intel. Here's the Q1 2025 numbers that we'll break down.
Numbers were not great, especially given that the ex-growth PC end market, basically we're far along enough that PCs, laptops are no longer a high growth end market is what that means. But they are supposed to be in gradual recovery. Data centers are the new secular growth driver, but Intel's not really getting much upside from either of those things. And Intel CFO David Zinsser really wanted everyone to know that they beat expectations in Q1, but they didn't really. Let's come back to that here in just a moment. We're going to show you a couple of charts from our friends over at finchat.io. They are actually running a 25% off sale through May 1st. So if you've been looking to get a paid plan from finchat.io, now is a great time to do so.
You can check that out in the link below. finchat.io/CSI gets you 25% off any paid plan.
And so here's a chart that we made from finchat.io. You can see the revenue, nearly 12.7 billion. Technically, yes, it was above their guidance provided back in January, but still not great. Revenue is still in year-over-year decline, and that trend is going to get worse in the second quarter. The guidance implies less than $12 billion in revenue, which is both a sequential and year-over-year decrease. And another chart here from FinChat, the revenue segmentation, CCG or client computing group, that is the PC business, still currently the largest revenue and moneymaker for Intel. Data center, which doesn't really include much AI data center products at all. And then there in purple is Foundry at just shy of 4.7 billion, and then other in yellow. That's essentially Mobileye and Altera. And then the big red segment for revenue eliminations. That's because most of Intel Foundry's business comes from the CCG, the PC business, and the data center product group. So Intel can't count that revenue twice. That's how you arrive at that just shy of 12.7 billion revenue for Q1 2025. This all would be much more simple if the foundry business was actually spun off as an independent business rather than reported as a separate financial line item, but not really an independent business. But like you said, we'll address that later this week. And perhaps it's far too late for that to happen now. I mean, we've been kind of calling for this separation of the two businesses for years. It hasn't happened. And given the dire financials that we're looking at, maybe at this juncture, Intel just missed that window of opportunity to make the hard decision and split these two businesses in half. Maybe we can elaborate on that a bit more, discussing the gross margins and operating income.
Gross margins continue to deteriorate. In Q1 2025, gross margin ended up around 39%, down sequentially from 42%. And this is most likely due to idle fab equipment and overall corporate bloat, unfortunately. And that's something that the new CEO Tan wants to address right out of the gate. But another thing that's pressuring margins is in the accelerated computing area, CPUs are a commoditized part more than ever before. And there are lots of other CPU options a company like NVIDIA could choose to drop into its systems. We really do expect this gross margin pressure to continue for Intel. There is some good news for Intel, though. The PC business or client computing group, CCG, is still highly profitable, although the operating margins are deteriorating here as well. New ARM-based CPU options like from Qualcomm with their Snapdragon X systems are now on the market, and this looks like yet another area of divide and conquer of the former Intel empire.
And management did note here on the right-hand side of this chart, the data center business, which is essentially, again, X AI data center. They don't participate much at all in that segment, in that new segment of the data center industry. They did note better than expected sales, but you can see the operating margins well below the average for CCG. This is another key area Tan needs to fix. There's just a lot of inefficiencies in that portion of the business. And all those inefficiencies in the products is the whole reason why Intel, under Gelsinger a while back, decided to split Foundry off into this kind of weird hybrid separate operating unit, because a lot of Intel's product businesses were pushing some of their own inefficiencies off onto Intel Foundry. And obviously this still needs to be fixed. Here's the Intel Foundry slide. This segment of the business still operating very deep in the red and really not generating much intercompany revenue, even as it stands right now. But obviously the bigger problem here is that big operating loss.
We'll be talking more about this and CEO of Intel Tan's keynote at the Foundry Direct Connect on April 29th. We'll have some coverage of that on Semi Insider. You can get access to our Discord server and all of our content for Semi Insiders via a link in the description below. We actually have a sale running right now on annual memberships. You get 25% off for an annual membership.
Market meltdown sale.
Check it out. Link below in the description.
Speaking of that, the final segment here, essentially, let's just call all other Mobileye and Altera. This will be addressed separately because Altera, of course, 51% of it getting sold to private equity firm Silver Lake, and Mobileye, a very different, really, in our opinion, non-core part of Intel's business, really should be treated as a separate business, and it's publicly traded again. So we'll circle back to this later on, but more of the same. The revenue is recovering off of the trough from a year ago, but the operating income still very meager. So we'll just put this on the shelf for the time being. So I wanted to come back to this part about the earnings beat in Q1 2025. When queried about this on the earnings call, the CFO was quick to talk about the revenue and operating income coming in above guidance for Q1, but really punted on why the guidance for Q2 and beyond, it basically showed further contraction in the business. And there was really just a punt. I think last year we did the video on Intel's corporate gaslighting, and we really feel like this is still happening. Yes, there are some serious macroeconomic and geopolitical challenges right now that are making life more difficult for Intel, but that is not the root of the problem here. This is a company that is losing market share on many fronts, essentially, let's call it all fronts. And so we have a hard time just blaming macroeconomic factors for this poor outlook. And also, elsewhere on the call, it was also mentioned that the Q1 2025 earnings beat was really due to a lot of their customers in PC and data center pulling forward CPU demand into Q1 ahead of expected tariffs. So was this really even a beat at all? I wouldn't call it that.
This slide all the way back in April of 2024, over a year ago, this was their 5 nodes in 4 years roadmap. And we think it's probably best to just scrap this roadmap at this point. There are so many unknowns. Tan said that there's a new roadmap in place and will be forthcoming, but we just don't have enough information on that yet.
And in fact, we told you last year when Intel was declaring victory on this 5 nodes in 4 years roadmap, we called a bluff on that because there was no victory actually. And that's exactly what's taking place here. So at this point, 18A is the new manufacturing process that they're on track to ramp up later this year. But most of that will be on internal Intel products. And it's unclear what kind of demand actually even exists for those internal Intel products. And also further, we don't know what kind of demand, if any at all, external outside of Intel customers want this manufacturing process either. So again, we'll have more updates after the Foundry Direct Connect over on Semi Insider. We'll look for clues that maybe the Foundry business and the manufacturing process node is on some sort of path to being a healthy business that actually delivers shareholder value at some point in the future. But at this point, these old claims that Intel made really shouldn't have been relied on at all, but really definitely at this point, it needs to just be ignored until Tan outlines the new game plan going forward.
Thanks everybody for watching this episode or listening to this episode of Chipstock Investor. Make sure you hit the subscribe button, share with your friends, like the video, all that good stuff, and check out Semiconductor Insider membership, link in the description below. As we mentioned, we're having a sale on annual memberships. Check that out. Also, if you've been thinking about a FinChat paid subscription, right now is a perfect time to subscribe. Just 4 days only, get 25% off any paid plan, and they only run that sale twice a year. So get in now. See y'all soon at Chipstock Investor.